Today, we'll focus on understanding the price action, especially with high time frames. Then we'll learn how to move from high time frames to lower time frames slowly. We will understand the nature of imbalances and how they work. We'll also talk about the flow of the price. There are too many subjects to learn. If you're ready, let's start. Okay, let's talk about higher time frames and lower time frames and try to combine some ideas. In this 4-hour chart, as you can see, price started to gain momentum from the bottom with momentum imbalance. And then it created this very large imbalance behind. Remember, price cannot go on forever. It requires fuel to move at some point. Keep this in mind for now. During the pullback, it left the previous day high behind, as you can see. So what is the expected play here? Pull back to imbalance, power up, then hunt that previous day high. A very simple trade idea. Now I have dropped the time frame from 4 hours to 1 hour for further analysis. When you go on the lower time frames, you will find finer and finer imbalances for reactions. It's just like Russian dolls. Okay, remember this. No one in the world knows how much the imbalance will be filled. It is impossible to know. What we do is watch out for reactions and reversal signs. Notice the loss of momentum here. New green candlesticks appear. Let's drop to the 5-minute chart and talk even more about the price action. As you can see here, we have another inner imbalance. Price taps and instantly powers up. Right here at this moment, you can notice the structure started to change, creating new structure boxes, and price keep heading towards the previous day high. I specially choose this example. With each structure box, you can make certain entries and try to hunt the previous day high. And nothing wrong with it. No pain, no gain. Trading is not about win, win, win every day. Trading is all about the ability to accept losses and move on. Okay, let's try to understand something here. Price reacts to this very large imbalance and gains momentum towards the daily high. And you try to make entries. This is 100% correct. Nothing wrong with this. However, you forget something. Each time you place a trade, you are also creating liquidity with your stop losses. And we never know when this liquidity will be taken. This is exactly why we try to take profits at some points or move stop losses to break-even points. We must actively manage our trades. Trading is not investing. When you invest, you place your money and come back years later to see the results. But in trading, you must be active and adapt quickly. Okay, I always hear scalping is very hard. Yes, it is hard. Imagine a job where you can make thousands of dollars in minutes. Scalping is so hard because it is the most rewarding job in the world. However, no need to lose minus money with scalping. If you cannot scalp, then move on to the higher time frames. There's no shame in it. Remember, trading is all about making money, not proving something. Price sweeps the previous week low, as you can see here. Later on, this imbalance fails and price heads towards the previous week high. You can notice the price movement here. Where is this price going? The obvious equal highs above with previous week high. Let's drop to the 30-minute charts now. As you can see in the 30-minute time frame, structure changes right here. It is creating our initial structure box. Then the price pulls back into the discount area. Now what to do? Just make your entry, have this giant stop loss. Do not even ever look under 30 or 15-minute time frames. You are not doomed with 1-minute scalping. You have many options in trading life. Focus on what makes you money. So, what happened here? Price swept the previous week low. Structure changed, created our structure box with a nice imbalance area. And price swiftly started to move towards relative equal highs above with previous week high. This is a very classic smart money setup. How about shorting? Short or long has no difference at all. If you are confused with shorting, just inverse the charts and candlestick colors because you'll be doing exactly the same methods. This price was falling sharply towards this liquidity point below. Along the way, this giant momentum imbalance was created. Here is the question. You have noticed this momentum imbalance, and how can you trade after the imbalance? Let's talk about that. Now, I have switched the chart from the 4-hour time frame to 5-minute time frame. Notice what happens here. After the 4-hour momentum imbalance in the 5 minutes, very simple structure boxes. Price keeps breaking down towards the main liquidity below. So it is so obvious that the sellers took control here. Keep pushing the price down. Let me clarify the price action here one more time. You have noticed this very large hourly momentum imbalance. This is your first sign that the price wants to move into a certain direction. And then you just follow the flow with structure boxes until some certain liquidity area or imbalance. It is an endless battle between buyers and sellers. Okay folks, I hope that you have improved your skills with this video. See you in the next videos. Please take care. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You'll learn liquidity, inefficiencies, and structure mastery deeply. And we will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with magic alignment system. Finally, you'll discover a strategy called YOYO strategy, which will open new doors for you about taking and managing trades. If you are interested, you can find links on my website on the description. Take care, friends, manage your risks, and stay safe.